like the exits of PE and promoters is likely to continue next week as well.
Okay, well, Vinay Jaising, the MD of JM Financial, is also joining in. Vinay, how are you feeling about the market now? Do you think that this rally that we've seen up until now has more legs? And if yes, what are the pockets that are looking good to you now?
So I definitely think the market has more legs. More than market, I would tend to believe lots of stocks have a lot more legs. There are a lot of triggers, right? The first trigger is, the technical inflow. FIs have been selling off late, but, if you look at the last 3-4 months, despite the $3 billion which they sold off, they're still up, as much as $8-9 billion. They are today at, a 10-year low of about 17%. As compared to a 20% FI ownership. So there is money, 3+% bound to come in at a time wherein you're seeing MSCI put India's weightage higher and higher and China's weightage lower and lower. FI seemingly are reducing weightage, which makes no sense because the second trigger, which is the economic trigger, seems to suggest Indian equity markets, more than Indian equity markets, Indian GDP is set to outshine. Today we are adding between 15 to 20% of the incremental world's GDP. So again, too many positive triggers. Every time you see the GDP numbers come up, there are lots of smiles. The third trigger is the earnings growth. I don't know how many quarters since I've been looking at the numbers. It's been only about finance, right? Now you see the finance sector probably grew 21-22% in the BSE 500, but the rest of the space made the overall growth, including the energy space, to as much as 25%. So you've got a lot more legs of earnings growth. And finally, the corporate capex growth, which I think will come closer to post-elections. Once everybody starts seeing, that yes, the election's behind you, the corporates get a lot more confident and you'll see them move up. So lots of legs coming up out here, for us to believe that the market is slowing down.
All right, Vinay, we'll come back to you in just a bit, but what Nimesh was highlighting earlier, right? The Birla Group companies were all in focus and for good reason. Nigel, you've done some work?
Well, that's right. All through the week, we heard a lot about that. So let me go across the ball and, detail that. The Birla Group companies, they made a comeback this week. All three of them, started with Hindalco. Then you had Grasim. And the third one was Vodafone Idea as well. So it was a fairly eventful week for all these three stocks. Let's start off with Hindalco first. It was in the news because they said that they're likely looking to list Novelis in the United States. So Kabhi Khushi Kabhi Gum, right? A couple of weeks ago, we had that painful news coming in that Novelis had upped their capex. This time around, they're saying that they could be looking at an IPO out there. So that was something that the street was looking at. A couple of questions remain unanswered though. How much stake will they sell in Novelis? And why are they doing this? Why does Hindalco need the funds? So a couple of question marks continue to remain. What's the street's verdict though? The street would have preferred if they did a fresh issue of shares rather than do an OFS. Why is that? Because if they do a fresh issue of shares, then Novelis will get the money, and Novelis needs the money, not Hindalco that comes here to India. Besides that, it may not be the most tax efficient method because the one that needs the money is not really getting it, and it could also attract a holding company discount in the time to come. Besides that, you have an option. The FIs, well, they hold stake in Hindalco. They'll say, why do we own in Hindalco? We'll go and directly own Novelis. So that could be another point. And there's no big reason for the stock to re-rate from here. That was the brokerage verdict that came in, whether it was Nuvama or whether it was Investec as well. So that's about Hindalco. Next up, Grasim. They have forayed into paints. This was long awaited. Mr. Kumar Mangalam Birla, he says that in the next 3 years, well, they expected to do 10,000 crores of revenues and they expected to turn profitable as well. The street's verdict was, well, diversification is positive. As of now, they're into VSF as well as chemicals. That's a core business. So paints is obviously a far more attractive sector. There is growth potential there. There is ROC benefit as well. And it's not very commoditized. It's more B2C. So those are all the positives. So the street likes what they see. Now, the problem is for Asian Paints, because it appears it's a case where David is taking on Goliath. Why is Asian Paints a little bit under pressure? Well, the industry itself is like to see capacity addition of around 25%. Most of that will be Grasim. The remainder of that will be from Asian Paints itself because they're increasing capacity by 50%. Competition is being upped out here, whether it's JK, whether it is JSW Steel, Astral, Pidilite, all of them throwing their hat in there. And revenue growth for Asian Paints has slowed down in the past. And if they're going to make more gross margins, bulk of that will really pull out back into into ad spends. So that could be a problem for them. And as it is valuation-wise, not very, very cheap. And finally, Vodafone Idea. Towards the end of the week, you had comments that came in from Mr. Birla. He says that he expects, the focus continues to be on Vodafone Idea. They're looking at raising some funds as well. So it'll be interesting to see what is the quantum of funds, how much do the promoters participate, and how much can it deleverage their book. So All these three names, they came back, and Mr. Birla was in business all through the week. Vinay, let me come across to you. What's your view on these themes? You know, whether it's Novelis, Asian Paints is up for a bit of a challenge, or if you want to talk about Vodafone Idea as well, any view on any of these three names?
So, very quickly, a couple of comments on each. Let's start with the easier one, which is paints. Clearly, when competition is seeping up, the demand is not going to grow as much, right? The demand historically, if I look at the last decade, has been at about 1.2, 1.3 times the nominal GDP. So 14 to 15% is the overall demand number which will come up. All of a sudden now you have not one but three new players. All three of the players are industries which are to be reckoned with. One is obviously Grasim, but let's not forget, you have JK Cement and JSW Paint. So players who have their nexus to distributors who do some building or building construction work in the overall arena. You're seeing the Indian government increase the capex as well. So distributors are going to be talking to these three players for more reasons than one, be it for cement or be it for steel. So you will see these players be a lot more serious. Obviously, Grasim's reach, the way it's coming up on day one, seems to be higher than the number two player, both in terms of the overall size which they would come up in capacity and the distributor reach of, not 50,000. They're talking to about 95,000 odd distributors. 54,000 of them are servicing them already in the cement part. So these are big numbers. So I think the paint industry could have a derating. Having said that, the price to book for the paint industry is as much as, north of 5 times. If I were to look at it with a Grasim perspective, it's a great thing because at one time they were investing in companies like Vodafone, and the big question investors were to ask Grasim is, why don't you focus on where you think your return on capital employed is going to be a lot more positive? And that's where paints came into the picture. And now, they've got kind of a horse's benders because they're putting a lot more money in paint. So I think that's a thumbs up for Grasim of what they're doing. But they're getting into an industry where they will be able to break the moats, and it's not a great time for the industry as a whole. So that's on the paint part of it. In the aluminum part of it, I think it's the same comments you made, so I won't repeat it. There are a few loopholes where the company needs to be telling us why. But simply put, I think they're expecting the valuations of what US companies would give them compared to India be a little bit better. I think that was the only logic, we could look at as a company. Moving to your third question on telecom, if I were to look at Vodafone Idea just as a company, not as a stock, at 2.2, 2.3 trillion rupees of debt and with an EBITDA which is so much smaller, this is a company which needs equity. What better time to raise equity when the market is close to its top and you're seeing the ARPUs move up? So technically, the telecom industry can get a lot more healthy. All the operators, not just Vodafone Idea if it succeeds, but all the operators would start seeing a lot of sanity coming into the picture if it succeeds. So I wouldn't bother as much about what happens to Vodafone Idea when it does the equity issuance. It will save a company which could have a lot of pressures because the debt it's mounted up. But the entire sector in telecom would go into a lot more saner levels, and you'll start seeing ARPUs inch up out there.
All right, Vinay, thanks very much for that. It's a pretty comprehensive sort of run through of different sectors, but of course the Birla companies in each of these sectors as well. Now PSUs have been on a roll, right? Massive gains in the last couple of years. But the question is, will it continue? Nimesh is here. He's been kind of beating the PSU drum for the last 1 year or so. Nimesh, what's latest?
So, Prashant, as you rightly pointed out, the index has done very well. A lot of stocks have done well. But today I've looked at the data where has been the highest institutional participation in the PSU stocks. So let me just go to the wall and put the data out. So, if you just look at the PSU index, since the beginning of this year, the index is up 21%. But since October 2020, when the really PSU rally started, the index is up almost 280%. So that's the kind of index move we've seen. Now, what I'm doing is we're looking at where the FI holding has been the highest within the PSU names. So some names stand out: NMDC, BEL, HAL, and the PSU bank stocks like Bank of Baroda, Canara Bank, Indian Bank and Union Bank. So these are the few names where the FIs have bought aggressively within the PSU names. But if you look at the DII concentration, that's been largely in the stocks like Gujarat Gas, Nalco, Concor, and some PSU banks like Indian Bank, Bank of India, as well as Hudco. So that's been the stocks where there's been a massive accumulation. Now, I've just broken down into various sectors as well. The first sector is utilities. Now, within the utilities, the biggest swing or the biggest accumulation has happened from the FIs in power grid. Their ownership is now 31% versus minus 2% a year back and just 2% 5 years back. And so is the case with NTPC and GAIL, 17 and 14 versus in GAIL, there was hardly any participation or institutional holding 5 years back or 1 year back. So that's the utility space. But if you look at the DI swing, the domestic institutional investor swing has been the highest in NTPC. That's come to now 27% holding versus minus 1% a 5 year back. So there's been a big of lap, accumulation happening from DIs in that stock. Now, if you look at the material space, in the material space, the highest FI holding has increased in NALCO to 12% versus minus 3% a year back. So that's been a big swing there. Others like NMDC, Coal India and SAIL are the other names where FIs have lapped up aggressively in the last 1 year versus the holding was virtually zero a year back. But within the materials, the big swing from the domestic side has happened in Coal India. That's been the big stock which has been accumulated by the domestic funds. Now they're holding close to 23% versus their holding was just 1% 5 years back. So that's what the DIs have bought within the material space. Now, if you look at the industrials, now this is an interesting chart. Within the industrials, FIs have aggressively bought Concor. They now have an ownership of close to 20% versus just which was minus 2% a year back. So big swing there. The others like the two, HAL and BL, that's been accumulated aggressively, and the likes of IRCTC and even BHEL has been aggressively accumulated. Now they own close to 7% ownership versus virtually minus 1% a year back. So that's been the swing in the industrials. But within the industrials, where the domestics have bought aggressively is BEL. Their ownership is now close to 22% versus minus 1% 5 years back. I'm just quoting all the data from Bernstein report. The next sector is the financials, especially the likes of REC, PFC. They all have done very well, but that's where the big accumulation has been. REC, PFC 18 and 21%, and the PSU banks like Bob, Canner and SBI has bought, the FIs have bought aggressively within the financial basket. But in the from the DI's perspective, the big swing has happened in SBI. Look at this, 22% is what SBI has been cornered by mutual funds now versus minus 1% 5 years back. So that's been a big swing in the PSU banks. The last one is OMCs. A big move in the last 6 or 8 months, but look at the HPCL, BPCL and IOC. The swing has been like 14% versus virtually zero for 1 year back. BPCL now they own 14% versus just 1% earlier, and the likes of IOC now they own 9% versus just 1%. So there's been a big accumulation within the OMCs as well from the larger FIs. But the big swing has happened in HPBP from the domestic side. They now own close to 21% of HPCL and BPCL versus having zero holding 5 years back. So this is what the data suggests from Bernstein note. While there are only select stocks within the PSUs where the DIs and FIs have bought, but the swing has been quite large in the likes of SBI and HPBP from the domestic investors.
Right. Nimesh, thanks very much for that. Vinay, if you want to weigh in, from what I recall, you don't have very many PSU names in your portfolio. I think BEL is one, right? You used to own BEL. I'm not sure if you still have it in the portfolio. And anything else you've added recently?
So, lots of themes you were saying, we were smiling. So we do own a lot of defense names, not just BEL, but also Hindustan Aeronautics, Bharat Dynamics, but bought at cheaper levels. We like PSU banks a lot. We've been, we had the pleasure of riding the rally, be it SBI earlier, BOB now, as well as, we've gotten to Can Bank. So, attractive valuation, great dividend yield stories, and then, you move on to robust growth. That's what we are focused on the PSU space. Where I guess we are not as much in the PSU space is in the PSU energy basket, which itself has done very well. We do, like NTPC because it's getting a lot into renewable energy. You're looking at that company have a 60,000 megawatt capacity with incrementally 20 more thousand megawatts coming up, and that too in renewable space. So that'll make it a very exciting story, not just on valuations, but also on earnings growth coming ahead. The reason why we're not liking the energy names are, think of it, let's say 1 year ahead. Today, your marketing margins and your refining margins are very robust. Your marketing margins are probably 3 times higher than what they were historically. That is bound to change. You're bound to see petrol, diesel price cuts as time takes its place. Not oil prices move up, but petrol, diesel price cuts. These superordinary margins, when they move away, the EPS of a lot of these companies, especially OMCs, in our analysis will come down substantially. So that's a space we've relatively avoided.
All right, we'll take a quick break on that note. But on the other side of the break, Japan's Nikkei hit a record high after 34 long years. We explain the significance in just a bit. Stay with us. Welcome back to Editors Roundtable on CNBC TV18. Now, the Japanese market has been on a tear. Of course, Japan has also entered into a recession, so it's very interesting what's happening over there. But Prashant has walked up to the wall to tell you what this means, or what this could mean for our markets. Prashant, over to you.
Well, thanks for that, Sonia. You know, I'm going to modify or paraphrase one of the most famous lines in Indian movie history, right? The dialogue from Sholay, "So jao nahi to gabbar aa jayega." In that same sense, for the longest time, I mean, you know, investors never said it, but that was the feeling. Don't do too much exuberance, don't do too much craziness, otherwise look at what happened with Japan. That is essentially the example that Japanese market used to serve for the last 20 years that I've looked at markets. And that has changed now. This is how it has changed. This is 34 years of the Japanese Nikkei 225. And after 34 years, we finally made a high, right? We finally made a high this week. So that's quite significant. Now, let me just quickly tell you what has happened. This is the returns since, you know, the 1989, essentially, since 1990, early 1990. The last time the Nikkei was at a high. Of course, we've only gotten back to that level, so it's up only 1%. Look at the others, 1,640% for the S&P. These are all dollar returns, by the way. Nifty is up 1,600%. The Shanghai is up 2,000%. So while all other markets were basically going boom, boom, you had the Nikkei, which essentially was doing nothing. It was sideways, right? Just to put this rally in context, so the 1989 big boom and bust, that happened after a sharp 200% bull run for the Nikkei after the Plaza Accord was signed in 1985. The Plaza Accord, of course, was when, you know, everyone, all these big countries came together and decided to devalue the dollar. And then there was a 200% run on the Nikkei, which peaked out in 89. This particular run began in October of 2022, and the Nikkei since then is up about 50% or so. So you may say we are back at records and we've done a lot, but we're only up about 50%, and we've gotten back to those levels once again. It's a story of boom and bust, really, right? The Japanese market. So I'm just going to quickly tell you what happened. Basically, there was a gigantic asset bubble in the late 1980s in Japan. It was largely led by property, commercial property, residential property, and of course equities as well. The bubble finally burst in 1990. It basically damaged banks' balance sheets. Corporates cut back capacity. They cut back capacity. They cut back employment. Consumer confidence fell. And of course, you know, consumers' inflation expectations about how much wage increases they can expect, that went into the negative, and that stayed in the negative for the next 20 years or so. And that is the example that many actually, I mean, it's a scary example, but it actually has happened over the last 30 years or so. What has changed since late 2022? Japan finally, I mean, the Japanese central bank has been trying to target an inflation level of 2% without success for the last 20 years. But it finally found some success. It exited, or it started the process of getting out of deflation. Corporate sort of capex renewed. There was improved and a lot of focus on corporate governance as well over the last 1.5 years. And so foreign investors have made a beeline back there. Balance sheet reforms, etc., have also, you know, happened. You know, Warren Buffett famously, I think about 15 years ago, said, and he was asked by a student in one of the talks that he was giving, that would you invest in Japan? And Warren Buffett at that point responded, you know, the Japanese stock market is a fantastic market, but without fantastic companies. That perhaps at the margin is starting to change a little bit, as this chart shows you. And it also talks to the bull market that we're in, that even a 30-year laggard is back at new highs. Back to you.
All right. Thanks a lot for that, Prashant. Well, let's thank our guest, Vinay, as well for joining in. And with that, it's a wrap. Thanks for watching. The news comes up and continues through the course of the day, but we'll be back bright and early on Monday morning.